Once again, the beauty of levels and technical analysis is proven. See gold trading precisely in the zone which I had mentioned in the morning analysis as the no trade zone 1830 1842. Likewise, the US crude also has seen a high at 74.9, close to 75, and dropped since then, and now trading with a drop at 73.4, which is definitely a very good support. So what to expect? See, these levels I told you in the morning also. Now what to expect today? Important day with the NFP data. Markets might trade volatile, and hence you need to trade with caution. Yes, do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which will keep you updated with the daily analysis. Let's start first to look into gold, followed with crude oil. Do watch till the end, do listen to it carefully, note down the levels and trade as per the levels. Let's start. Now look at the hourly charts for gold. You can clearly see higher lows are getting achieved at the same time 1842, giving it a resistance. This means it is trying to squeeze it out within this zone, and hence only sell entry I will again recommend is below 1830 levels. You should sell only below 1830, where you can expect 1824, 1820, and below that further lows can be expected. At the same time, beyond 1842 you can buy. However, remember 1845-47 zone is a very strong resistance. I had told you in the morning, and then 1850 till 1850 it has got very good resistance. Yes, these levels are also achievable. You can buy at 1842 and sell at 1830. We are remaining the levels as same in the morning, what we had seen in the morning. Directional movement is moderately bearish. Stochastic is looking upward. The MACD is in green here, trading with very little divergence. RSI trading flat on the hourly charts. Look at the 2-hour charts. On the 2-hour charts, see these 4 candles getting the resistance precisely at 1841-42. At the same time, look at these 3 candles. So higher lows, lower highs, what we saw on the hourly charts are getting repeated. So yes, do not trade in between this zone at least. In fact, below 1834 you can expect 1830-30. However, only bearishness is below 1830 levels. Remember this fact. Directional movement moderately bearish. Stochastic dropping from the highs. The MACD is on sell, trying to converge crossover. If it does, certainly we can see the bullishness. RSI trading flat. And if you look at the 3-hour charts, now look at the 3-hour charts closely. It appears it is ready for a drop. That is what we can see. But yes, if it breaks past 1842, certainly that is the time, that is the point beyond which it may trade bullish. So consider that as a reversal indication. After that, it will give you similar bullish candles, almost $10 beyond 1842. It means it can trade till towards 1850 and 1855 zone. So yes, that is the level beyond which you can buy. However, look at the body size is increasing. Possibly once it draws below 1830, it may call for more bearishness right now. But you need to trade with caution as it is consolidating here. Directional movement is bearish. Stochastic is looking downwards. The MACD is still bearish. However, see the candle size is stabilized. Probably it may converge and crossover. RSI is trading flat. And if you look at the 4-hour charts, now look at the 4-hour charts. Similar observation, 3 candles, lower highs, and this candle trying to give you higher lows. Now also, if you look at the beauty of the candle, see this, very well aligned. So only bearishness below 1830 levels can be expected. Directional movement is moderately bearish. Stochastic is trading comfortable, and MACD is still trading with divergence, and it is still showing bearishness. RSI is trading flat, not showing the strength. Now look at the daily. On the daily charts, see lower highs here means 1850, 1855, and higher lows here means 1830. Certainly be a good support. So in between 1842, at least you should not take a position. Beyond 1842, you have to trail your stop losses till 1852, 55, and you have to ensure that you can book profit at around these levels. This is a very good resistance zone. At the same time, below 1830, you can again expect 1825, 24, and then below that a further drop might take it till towards this zone. See on the daily chart, the support level from the 20 period moving average is going to be seen at around 1810 levels. So below 1820, probably we may see it hitting 1810, 1812 zone. Directional movement is bullish here. It may converge a bit. Stochastic has seen a little drop. The MACD is trading in green with a little divergence. It is trying to converge rather, and RSI is trading flat. Considering this, in between 30 and 1830 and 1842, do not take a position. On the upside, you need to remain cautious till 1850, 1850. You see, it can reverse any point of time. If it has to drop, it can reverse any point of time, say till 1855. Only beyond which you can expect that it is going to break past 1860 again. On the downside, you need to be cautious of 1824 and 1820 levels, because below 1820 it will bring more bears out there. So take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Let's have a look at crude oil. And yes, if you want to learn this art of trading profitably, you should join my mentorship batch. It's starting on 9th of January. Few seats are left. Book your seats now so that you can trade profitably and trade with confidence. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now let's have a look at crude oil on the hourly charts. Now crude oil on the hourly charts has again come to 73.4 levels, which is very good support, and then below which you can expect 73 as the maximum support zone. Right now it is trying to trade in this box between 73 and 75. Yes, it breached once, however it breached on the upside also once, and hence in between these $2 it is trying to stabilize its movement. On the hourly chart, see the candle size is diminishing. It is trading outside Bollinger Bands. Hence, you need to remain cautious of 73. Only below 73, 73.4, you can expect little more bearishness. Directional movement is bearish. Stochastic is looking down. The MACD has crossed over again for a sell entry. It is trading with divergence. RSI is also looking down, showing little weakness here. Now, look at the 2-hour charts. See sharp drop, retracement or consolidation. Now it is trying to come out of this box, and once it trades below 73, probably it will call for a little more bearishness, but be cautious till 72. This is the next support. So below 73.4, the first support at 73 and the next support at 72.2, 72 levels will be seen. In fact, till 71.8 it has got good support. Below that, further drop can be expected. Direction movement bearish, stochastic trading with a drop. MACD is in green, however willing to converge crossover for a sell entry, and RSI is still looking down. If you look at the 3-hour charts, now look at the 3-hour charts closely, you will find after 3 red candles, this candle is trying to give a breakout. A breakout means there is a possibility that it can take it till towards this zone, that is at around 72.2. Yes, below 73.4 you can expect 73 till 73. It is a very good support. Below 73 you can expect 72.2, 71.8 levels, which is definitely a very good support. Below 71.8 you can expect another round of drop there. Directional movement bearish, however look at the Bollinger Bands closing in here. Probably this zone at 72.2 levels, 72 levels are certainly be a very good support. Directional movement is bearish, stochastic trading oversold. The MACD is in green trying to converge, and RSI is looking downward, showing little bearishness. Now look at the 4-hour charts. On the 4-hour charts, look at this candle, $0.7, and if you count $0.7 from here at 73.7, you can again expect 73. So 73 is definitely going to be a very good support, and in fact below that you can expect 72.4, 72.2, 71.8 levels. Very good support on the downside here exists. You need to remain cautious. Only buy position is above 75 levels. That is also very clear. Direction movement bearish, stochastic looking downwards. The MACD is trying to cross over for the bullish move. RSI is looking downwards, showing little weakness. And if you look at the daily charts, look at the daily charts here, and see these two candles very well aligned. And if you connect the dots here, 72.2, 72.4 levels are definitely going to be a good support level. Achieving those levels, it can reverse, and yes, the candle might turn green. If it breaks past 74.7 levels, it may try to trade green. So one thing, you need to be cautious on the downside. See the movement of the candle, it is almost deep red without any looking back, and possibly it may try to achieve 73. Below 73 you can short, you can sell for 72.4, 72.2 till 71.8. it has got very good support, and then from there a little retracement can be expected. That is one part to it. At the same time, above 74.7 you can buy for 75.2, and then beyond that it is going to fly high. Directional movement is bearish, stochastic is trading oversold. The MACD has crossed over. This is trading with divergence, indicating bearishness, and RSI is also looking downwards. Considering this, uh, riskier trade is to sell at 73.4. Safer trade is to sell at 73. Below 73, you can expect 72.4, 72.2, and 71.8. These three levels are very, very important for crude oil. Only and only if it breaks below 71.8, it will show further bearishness, taking it to 70.8 and $70 levels, making the bottom there. And at the same time, you can buy at 74.7 levels. So in between 73.4 and 74.7, you need to trade with caution for this $1.3. Stay away from markets for this $1.3. Take your positions accordingly. Trade accordingly, trade with a stop loss, trade with a trailing stop loss, and do not forget to like, share, subscribe, and comment. Join my mentorship batch if you want to learn the art of trading. Thank you very much. Have a great profitable trading day ahead. Thank you.